Hello and welcome to this Purchasing Insight webinar on how to achieve complete visibility in purchase to pay. We're seeing people still joining, so I'm going to give it one more minute before we start. Okay, we're just a minute into it and people are still arriving. So again, welcome to this Purchasing Insight webinar. Purchase to pay KPIs are notoriously difficult to collate, but performance measures are absolutely critical both in finance and procurement to understand how effective we're being at purchase to pay. There's plenty of solutions out there, but when we engage businesses and ask them how they measure their KPIs, there's a surprisingly large number of businesses that report difficulty in doing that. So we want to explore this further. So in today's webinar, we're going to look at some of the challenges related to performance measures in purchase to pay. We're going to look at some examples of best practice and how P2P operations can be transformed with good visibility. And I think the highlight of the webinar will be a live demo of some KPIs from an end-to-end P2P solution. Before we start, I just want to acknowledge the kind support of Canon in developing this webinar, and we'll be hearing a little bit more from Canon a little bit later. So, what's the current state of purchase to pay? Looking at what P2P used to be yesterday and today, maybe 20, 25 years ago, P2P wasn't really a thing. It was something that you had to explain to senior executives. Even procurement directors didn't necessarily buy into the importance of purchase to pay. And I think there was a good reason for that. P2P, or good P2P, shines a light on shortcomings in procurement and finance. And a senior finance person or a senior procurement person wouldn't necessarily want to take accountability for something that they didn't have full control of. But today, that's not the case, and P2P is certainly a thing. It's widely recognized as an essential set of business tools, both across procurement, finance, and beyond. Certainly, compared to 20 years ago, the technology is a lot better. It's much more mature. It's much more robust, much more reliable and trusted. It actually delivers cost savings, both in terms of procurement savings and process efficiency. And the user experience is much better than it used to be. And importantly, the user experience is in line with the experience people have of using technology in their ordinary everyday life. But the key question as it relates to KPIs is, how do you know that all of this stuff works? Is value actually being added? How do you measure return on investment? And while we can all intuitively believe that P2P is the right thing to do, we do need to ask and be able to answer the difficult questions. How do you know that it's actually delivering any value? And then you have to ask the question, or rather answer the question, how do you measure success? And importantly, what are the right performance indicators? What are the right KPIs to put in place? Now, last year, working with Canon, we did some research, and we asked lots of businesses across Europe all about their P2P operations. And one of the really interesting findings was the level of the proportion of businesses that really had difficulty in measuring performance of purchase to pay. More than half said that they didn't have a single source of the truth. Most of them were forced to collate data from multiple sources, and a significant minority, 11%, That's it. It is a minority, but it's not insignificant, are collating their data manually. And a tiny proportion, only 7%, have specialist P2P analytics tools. I find this quite surprising. In many other disciplines in business, that there are specialist analytics tools to measure performance, but not so in P2P. So which P2P KPIs are businesses measuring, and which KPIs would they like to measure? Well, this is one of the questions we asked. We had a range of KPIs based on the things that people tell us that they measure, and asked, do you measure these performance, or do you record these performance indicators? Do you measure performance in these terms? Or will you measure them in the future, or do you not know? Now, I'm not going to go through the details of this chart, because I would encourage you to actually download the report, and in the follow-up to this webinar I'll send you a link where you can get this report and you can read the detailed analysis of these findings. However, there are a couple of what I think are really interesting insights in this data. First of all, for many of the KPIs, there's an even split between what is measured today and what businesses say they will measure tomorrow. Now, you can put some interpretations on this, but my interpretation is that these KPIs, they're the things that people know they ought to measure, yet half the businesses who know they ought to measure it are not doing it today. That means there's some challenge. There must be a reason why they've not done it so far. And this is a reflection of this kind of mysterious inability that many businesses have to have a proper purchase to pay KPI dashboard. The second insight is that there are a whole set of KPIs, and two examples are measurement of DPO, or days payable outstanding, and time to pay. How long does it take to make an invoice okay to pay? And for these KPIs, there's quite a large number of organisations that say, yes, we do measure that. And there's also a large number that say no, or don't know. Now, DPO and time to pay an invoice, these are absolutely fundamental KPIs, and businesses do measure this. So why is it that quite a large proportion of businesses say they don't measure it, or they don't know? And I think this is actually just a reflection of the point of view of those who we questioned. You know, are you a procurement person? Are you a finance person? And you may not know what KPIs are actually measured, because it may happen in a different part of the organisation. And this is what I call the P2P car crash. Now, I don't mean this is a car crash in the sense that it's a horrible, mangled mess. What I mean is, if, for example, you have a car crash and the police are investigating to see what the cause was, they could speak to lots of witnesses of this car crash, and this is a known phenomenon. All of the witnesses will give completely different descriptions of what happened, even down to reporting the colour of the cars being different, or the weather being different. Some will say the sun was shining, some will say it was raining. It's a real thing that happens. People's memories are very unreliable, and people's perspectives are all very, very different. So, for example, if you say to a finance person, tell us what purchase to pay is, they would say some keywords. They would say, well, it's about getting accounting accuracy, it's about controlling GRNI, or optimizing cash flow, or it might be about automating the process. And if you ask a purchasing person the same question, what does P2P mean? They will say, well, it's about making sure you get compliance to contract, or it's about analysing spend to support strategic sourcing initiatives, or it might be about prompt payment to better manage supplier relationships. But when you set these keywords side by side, They're actually exactly the same set of keywords, just with a different emphasis. But you would be forgiven in the previous two slides for thinking that I was presenting two entirely different sets of keywords. And this is, I think this represents the different, very different points of view that finance people and procurement people have of purchase to pay. So what is best practice in terms of KPIs for purchase to pay? I think the first thing I would say is that you need to avoid having either P2 or 2P KPIs. What do I mean by that? Well, there are two P's in purchase to pay. There's purchase and there's pay. If you have a purely procurement perspective, you might have a P2 perspective, or if you're a finance person, you might have a 2P perspective. Make sure that the KPIs span the whole of the process, not just one end or the other. Second thing is, don't try to boil the ocean. Remember what K stands for. K stands for key. So only measure your key performance indicators. There are probably dozens of performance indicators that help you understand your return on investment in P2P technology. But there's a much smaller subset, which are the key indicators. And I'm going to be a little bit provocative here. And I'm going to propose that you only need 3. You only need 3 KPIs. It might be better if you can manage more, but if you're going to avoid trying to boil the ocean, the top 3 KPIs may suffice, and they'll certainly get you a long way down the road to effectively measuring your return on investment. So what's the first one? The first one is the ratio of invoices to purchase orders. Now, this is not exact. There isn't always a one-to-one match between invoices and purchase orders, but if you just measure that ratio, that gives you a very good indication of how much spend you have under control. If purchase orders are being raised, then there's some level of relationship, there's possibly a contract in place, you're probably in control of your spend. And it also gives a measure of purchase to pay compliance. By that I mean compliance to good practice, raising purchase orders rather than simply responding to invoices. The second KPI is straight through processing. What do I mean by that? I mean the number of, or the rate to which invoices are matched automatically with purchase orders and receipts so that they are untouched by human hands. There's no intervention required. And this is a measure of the level of automation that you have, and also an indication of your cost per invoice. It doesn't measure your actual cost per invoice. I would say that's not relevant. What's relevant is the trend. So if you see your level of straight-through processing going up, then you're in a healthy state. And the final or third KPI is payment on time. How many times or to what extent do you pay suppliers on time? This captures one of the most important objectives of purchase to pay. It's to make sure that you have an effective and safe purchasing process, that you're able to get goods and pay suppliers on time. So it's a really important measure of effectiveness. And what I would say is if you can measure these 3 things effectively and consistently, month after month, quarter after quarter, then you have certainly a good starting point for an effective set of KPIs. Okay, I mentioned Canon a little bit earlier, and I'm pleased to be joined by Fabrizio Falzerano from Canon and also Maria Holt from Palette. Hello, both of you.
Hi, Pete. Good morning, everybody. Yes, so I just introduced myself. Pete, my name is Fabrizio Falzerano. I'm part of Canon, Canon Europe. It's a pleasure to be joining you. And we've been working together for quite a long time now, Pete. It's always great to be on those kind of webinars to share insights. I'm here today representing Canon and representing the finance and procurement services and applications that we sell and we provide to customers in this field. I'm going to be joined by Maria Holt. Maria is a consultant from Palette. Palette is a provider of technology for purchase to pay, and Canon and Palette have a partnership in place for many years now. We help customers throughout Europe improving their processes in P2P. I'm sure Maria will introduce herself briefly later on. I just go ahead to say a few words before the demo that Maria Holt will be introducing shortly. This introduction for me is really, as I say, to say a few words around P2P automation and KPI measurements, more from the perspective of Canon. So, next slide. It's really the way we advocate, we see purchase to pay. And with our customers, we talk about moving into a digital world, right? So moving that into a world that is from manual and paper-driven into one that is fully digitized. And you know, ideally, we want to have automation of purchase to pay that is sitting outside of your finance system, outside of your ERP. To give flexibility, to give an easy way to streamline the end-to-end process. So the solution, the services that we provide are really about empowering companies with electronic purchasing, with technology to have budgeting, and of course the whole area around PO and the whole area around invoice handling and exception handling. You need to have an end-to-end process that is automated. And only once you have that in place, then you can really benefit from reporting, from analytics. And this is what we're going to see very shortly with Maria in the demo. So it's really achieving those KPIs that Pete mentioned earlier on through technology that can enable you in this process. Next slide. I just wanted to bring to life this conversation with a little case, just a few words. Is an example of a company that we have helped in the UK. It's a company called Q Electrical. Q Electrical is a typical kind of customer that we help with. They are a mid-sized organization, a strong national presence in the UK. They are a retailer of electrical components. They have 24 shops in the UK, managing around 100,000 invoices every year. And in the UK, they are a typical example of a company that is affected by a new piece of legislation, which is requiring all companies under a certain amount of revenues and a certain amount, let's say, composition to report on their payment performance and practices. So they are meeting those requirements. They have a requirement to report externally about how long it is taking them to pay their suppliers on average. And when we enter discussions with them, they had a manual process where they were matching invoices to delivery notes and purchase order manually. They didn't have at all a good visibility of their payment performance and payment status, which, as a consequence, was giving them problems in financial forecasting, problems in paying their suppliers on time. And it's a typical scenario of a manual process. So, next slide. In the context of improving KPI reporting, of course, as I say, the first step is to bring in a solution that can help you streamline the whole process. So it's 100% digital. You move from managing documents in a manual process to managing information and data. And that's what you want to achieve with full P2P. And today, Q Electrical has a set of easily to use reporting tools around payment forecasting, matching statistics. They can easily look at credit and payment periods. A set of tools that you will see shortly in the demo. And what this is giving them, quoting directly what the CFO has been telling us, they can generate today £90,000 per month of settlement discounts. In other words, they have so much improvements in the way they see the status of the payments that they can literally negotiate discounts with their suppliers, and this bringing money straight back into the cash flow. And obviously they have better forecasting, better budgeting, and above all they have the ability to report in a much easier way their performance in prompt payments to the regulators. So they are strengthening compliance and of course collaboration in the company. This is just a short introduction for me, really, for the demo, because now if I just leave you in the next slide with a quote from the financial director, which you can read here, which is really highlighting the benefit of spend visibility and control of the process through the use of purchase-to-pay automation. I just leave you by saying, okay, let's have a look into how this technology is really helping you streamlining the KPIs, tracking and measurement. So I would like to introduce Maria to take, let's say, control in the second part of the discussion.
Thank you.
Hi, Maria. I'm now going to hand over to your screen. So this is the thing that could go wrong. Let's hope not. There we are. Very nearly handed over control to one of the attendees. That wouldn't have been a good thing.
That would have been very fun. Okay.
Okay.
So, hi, my name is Maria, and I work as a consultant at Palette, and I will now show you some of the KPIs that we just talked about. And in Palette, in the system, we do have all the data around the purchase-to-pay process in the system. So that makes it that we can take out a lot of different reports and KPIs from the system to measure how good we are. I'm going to focus a little bit around the suppliers, and to have a good relationship with your suppliers is very important, of course. We expect them to deliver goods to us that we order, and they expect us to pay according to the agreement that we have with them. And if anything goes wrong here, it could actually, in the worst case, be so that we cannot deliver the goods out to our customers on the other hand. So it's very important that we do have control of our suppliers. So being able to follow up this is very crucial, and we can here then go in and identify what suppliers are good for us, and if we do maybe have some that we need to talk to or maybe exchange actually. So let's look into this. In the system we do have some standard KPIs that is visible for us when we do log in. So as for example, I can then see here that I have a KPI for my top 10 suppliers. And that is in terms of amount and money, but it could also be in terms of number of invoices. If you do get a lot of invoices, that could actually cause more work for accounts payable in the organization. But invoice amount, I mean, those are very important for us. We are spending a lot of money with those suppliers, and I get up a list here. And in this list, I at the moment can see that I have one of the suppliers that I'm going to have a meeting with. We're going to look over the contract with them, so it would be good for me to know that we have a good relationship with this specific supplier. So let's drill down here. So I click on that supplier, and it will then give me the status for this specific supplier at the moment. And here I can see if we do pay in time, and it seems like so most of the times. Well, there is one here that has been some issues with. I can also see that, yeah, most of the invoices are according to either a purchase order or that we do have some kind of contract with them. So it seems good. So yeah, that will be a good meeting with the supplier. But what we also could do here is to measure like more warnings. Let's say we take out another KPI for period of credit and payments. So do we pay our invoices in time or not? I'll just take out this on a specific company here. So what this shows me is an overview first, based on what payment terms we do have, if we are following those, if we pay in time or not. And it will also list the suppliers where it actually doesn't look so good. And here is a big warning for me, because Decathlon is one of our biggest suppliers. They're delivering a lot of goods out to the plants, and if we don't pay them in time, it might be they just stop delivering us the goods, and that would be a disaster. So let's look at this further. Take out the result and see what we have here. Okay, here, yeah, we do have 30 days of payment terms with them, and most of the times we do pay in time, actually. There are some variances here, but here is something that actually stands out. And this actually seems to be a booking error, so we have booked on the wrong year. So I guess that is what's taking up the number of days so much. But still, there is something here. We don't pay the invoices in time all the time, and that's not good for us. We can follow that most of the invoices are PO invoices, so yeah, that's good, but still, how can that be? So we have a lot of those KPIs. They're different. We can also measure how many of the invoices are matched to POs, how many invoices that we do get as e-invoices, and so on. But I will maybe, if we have time, come back to them later on. But I would like to look into this specific supplier a little bit more. And then what we do also have are some reports. So I will go in here and take out some reports. One is the matching statistic. And this will show per supplier, open this, how many invoices we do get and how many of them that are actually PO invoices. And it will also show how many that are matched automatically. How many do you have delivery variances, price variances, and so on. And then you know what you need to work with. So this is an overview of all the suppliers. But I will actually take out the report on only those two suppliers we just talked about. Sorry, save, I shouldn't do that. Search, like this. Now, this is the Altia and the Decathlon. Altia, it seemed to be good there. Everything seemed to be fine in the first KPI. But here I do get a warning, actually. It's a red here. It's 42% of the invoices are not matched due to delivery variances. But this I actually know about, because I know they are delivering goods over the sea. So it takes time, and they do send us e-invoices. So it's not actually an issue. But the system will still say, okay, here could be an issue. But it still looks good with Altia. The Decathlon, though, we know that we are not paying in time, so how can that be? Well, all invoices during this time period has been matched to purchase orders. But 44% was not matched automatically, and that's not good. That means that we need to do a lot of work. Why couldn't the matching be done automatically? It's also that they have 13% of the invoices actually do have some kind of price variance. And that also means that we need to work more with those invoices. And that's maybe why we couldn't pay the invoices in time. So there we have probably the reason to why we don't pay the invoices in time. So here, I think we need to go back to Decathlon and talk to them and see what is wrong here. What can we do? How can we improve this process? Another good report, if we look into that, if we take the Altia supplier again, is the invoice processing day. We will have this meeting with Altia and look over the agreement with them. And today we do have 30 days of payment terms with them. And I would like to measure now the internal process. How are we doing when it comes to handling their invoices? And then we see that in average it takes us 4 days to process the invoices. And in all the reports, you can always drill down to the invoices. And here we can see a good thing. Most of the invoices are actually touchless. They are fully matched. They go directly in for payment. So it's only just the first day they arrive. So it's just 1 day of processing time. So this means that we could maybe talk to the supplier about, okay, we can pay you in 10 days instead of 30 days. And that could be turned into money. We could maybe get some discount in the same way as Q Electrical did with their suppliers. Say, okay, pay in 10 days, and then we'll get some discount back. And because this was one of our biggest suppliers in terms of money, that actually could save us a lot of money. So those kind of KPIs and reports are available in the system for you to search and take out the information from. Okay, that's what I was going to show you. Okay. So back to you, Peter.
Thanks, Maria. What I like about this is, you have, first of all, you have a KPI dashboard that gives you an overall view of what's going on, but it's actually real time. So unlike most organizations that will collate things and use spreadsheets, and it's really they have a KPI dashboard that is a reflection of the past. You've got here a reflection of actually what's happening now. And then the second thing which is great is you can go straight from the KPI dashboard and drill down into problem areas and identify things. Now, we're, in the last few minutes, I want to cover some of the questions that have been asked. And I don't think we'll have time to go through them all, but one of the questions that has been asked, Maria, if we could stay on your screen, someone has asked how easy it is to configure or customize these reports, or are they just off-the-shelf libraries? Are you able to explain how you could configure a report?
Absolutely. Some of them are fixed reports, and that they will be that you don't have so many different selections on those. But if you go down to the reports section, and as for example, take the show invoice report. This is not actually a report in itself. It's more a tool for you where you can build your own reports. So anything that is in the purchase to pay process could be searched in here. So I can search for a specific supplier during a specific time period, connected to a specific purchase order or so on. And then what you can do is to save your selections and get your own reports in here that you can take out. So this is a good basic where you create your own reports. And then of course you have others that are more like payment forecasts and so on, fixed reports. But you have them both, and you do it yourself. You just fill in, save selection, and you have your report. Yeah, thanks.
Okay. Thanks for that. Let me just come back to my screen. Okay, and as usual, we have a number of questions. There's never time to go through all of them, but I do promise that I'll send answers to all of the questions as part of a follow-up. And I have the privilege of being able to cherry pick the questions that are there. There's one particular question that came through, which is about, why is it that businesses struggle to measure KPIs in purchase to pay? And I mentioned that it's clear from the survey evidence that there is this difficulty, but what's the actual reason for that? And I have a view. Whether people who are managing purchase to pay, whether they're in a procurement environment or whether they're in a finance environment, they tend to be working in firefighting mode much of the time. They're constantly trying to solve problems, constantly trying to get urgent purchase orders out, trying to reconcile mismatches, trying to police good behavior, all of these kinds of things. And in that kind of firefighting environment, it can be very difficult to take a step back and take stock and understand whether you're doing things right, and in fact whether you're doing the right things. And that's what KPIs are all about. And I think it's really important to invest time and resources, particularly in purchase to pay, to take the time out on a regular basis, invest in resources to be able to take time out and measure those things, whether you're doing things right, whether you're doing the right things. And I go back to the point that I made before. Compared to many organizations who just aren't measuring anything, starting with those top 3 KPIs gives you a very good start indeed. And that those things are measurable, and it's possible to measure those things on a regular basis so that you can see trends. Okay. We're approaching the running out of time stage, so I'm not going to tackle any more of the questions, but I would like to thank Fabrizio and Maria for supporting the webinar. Thanks both. I'd also like to thank all of the attendees for your time. It's very much appreciated. I hope it's useful. you will receive a follow-up email shortly, together with a recording of the webinar. And if any of your colleagues were unable to attend but registered, they'll also get that. So thank you all again, and I look forward to seeing you all again next time.